please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to this special edition of the State of the Economy. I am Latha Venkatesh. There are several reasons why we have to look at the dollar, look at the economy. It is not just 70 to the dollar. The new normal appears to be much lower. 70.64, an all-time low, is what the dollar rupee hit today. There were probably fresh demand from importers, mainly oil refiners, and of course slightly higher crude prices also hit the Indian currency. But LATAM currencies were getting weaker because of Brazil. That also seemed to be another factor. But that's not the only reason why we are discussing the economy today. The Reserve Bank of India, in its annual report, said that over 99.30% of the demonetized currencies have made it back to the banking system. That's a good peg to check whether demonetization had any benefits at all, or was it just an exercise in futility. Also, the Reserve Bank said that its February 12th circular, which imposes rather stringent rules on how banks will deal with defaulters of even a single day, is likely to be applied even to NBFC companies very soon. It's a plan. It's not yet a done deal. It also has some fairly optimistic assessment of the Indian economy, though it points out to a couple of red flags that there is an upside risk to inflation and an upside risk to fiscal deficit as well. Already last year's targets were not met, and this year election pressures could lead to fiscal slippages. Those are the red flags it is pointing out to. Joining us to discuss the state of the economy are Upasana Bhardwaj, the senior economist at Kotak Mahindra Bank. Also on the show with me are Pinaki Chakraborty, professor at the National Institute of Public Finance and Policy, Professor M. Govinda Rao, former member of the Prime Minister's Economic Advisory Council and the 14th Finance Commission. And in a bit, there we have Soumyakanti Ghosh, the chief economist of State Bank of India. Lady and gentlemen, thank you very much for joining me. Well, first, the immediate rupee depreciation to 70.64. Upasana, is that worrisome? Does that change things, or is it good that the economy gets a fillip, almost like a rate cut?
Well, I think, Latha, clearly, if we continue to see a slow and steady depreciation in the currency, that really doesn't necessitate a worrisome thing right now. But having said that, we'll have to be very cautious because, India being a net importing country, oil prices are also not providing too much of comfort at this point in time. And that, coupled with the fact that we have non-oil, non-gold imports structurally showing a significant, upward pressure, all in all, the current account deficit seems to be really coming under a lot of pressure. So clearly, we do have a significant risk of a sharp move, and that could become a little bit of a problem. Having said that, yes, if we do continue to depreciate at a reasonable pace, then at some point we will reach where some of our exports start getting competitive, and that could start boosting exports, which is much needed at this point in time. But in the near term, for sure, it does point towards a worrisome move.
Okay. Well, let me get the other economist who has to be, for his living, advising his treasury, Soumyakanti Ghosh. Soumya, as an economist, how are you looking at this depreciation of the currency? I don't know whether to call it gentle, really. A large part of the depreciation has come in the last 10 days. From 69, we are now to almost 71. 70.59 when we went to bed, and 70.64 got traded. Can the Reserve Bank really ensure a gentle depreciation? Or, once it starts depreciating, it usually gets out of hand?
I think that's a very interesting question, Latha, which you have posed, and I will not answer the questions which Upasana has answered. I think that pressure on current account deficit, because these are obvious consequences of a currency depreciating. But let me, I think, in the context of this RBI annual report, let me just put you in very quickly some very interesting facets of what the RBI has actually documented in the RBI annual report, as also in the monthly bulletin which came out in August. I think one of the concerns which the RBI has clearly made in the annual report also, if we just flip through the chapters and there is actually a box on that, the RBI clearly says that the continued intervention in the foreign exchange market is not going to be efficient on the part of efficient on the part of any central bank. Because what happens is that whenever you intervene in the foreign exchange market, there is an attendant liquidity implication, and for that liquidity implication, that also has the liquidity management, so which could come in several ways, but the most common is the open market operation. Now, what the open market operation does is that whenever you do an open market operation, basically with an open market operation, you take out the liquidity which is injected into the system, and this is called sterilization. And the higher is the sterilization, that means the central banks have been successful in sterilizing the liquidity inflows which has arisen because of the purchase and sale of dollars. However, the important point is that over a point of time, as this impact the interest rates, that also leads to an capital inflows in the second round. So therefore, when the first round impact of sterilization impact is actually offset with an increased capital inflows, and ultimately the intervention may not have a desired consequences on the what the exchange rate with the RBI is trying to do. So you actually end up spending more reserves, but at the same time you are unable to defend the currency from external disturbances. So I think this has been very vividly put out by the central bank in the report, and the suggestion which is gives out is very interesting, which has already been discussed in public domain separately, is that we need to quickly implement the SDF facility, because that is unremunerated, that comes at a fixed rate of interest, and that comes without any collateral. So if we can do these two things, that could be actually the best learning from the current crisis. So as of now, I am not bemused by the continued weakness in the currency, because I think there is a limit to what the RBI can intervene in the forex market.
Okay. No, what I'm saying is, because of the collapse, collapse is a strong word, because of the fall of the currency, do you think that growth gets a fillip? I mean, your domestic industries are better protected from imports, and exporters have a better chance. Well, let me put that question to Dr. Govinda Rao. This is a fairly significant depreciation we have seen from 69 just about 2 weeks back to 70.64 and counting. Dr. Rao, does this normally actually protect growth?
I think it's important to adjust your exchange rate depending upon the rear. And, you know, I think in that sense of the term, I think, you know, some depreciation was warranted. And as Soumya said, you know, sort of interventions in the you know, RBI's intervention is not going to help much. It's not going to you know, sort of give you the benefit. It may be some short-term palliative, but it is not going to help in the long run. One other thing that I wanted to put across is that in addition to the current account deficit, this is also going to put some pressure on the prices. Because, you know, so all the imported prices will be much higher in terms of domestic currency. You know, this will particularly affect the transport sector. You know, there's something which we need to take into account. But I think, you know, one is not going to be unduly, one is not going to get, you know, sort of sleeplessness because there has been an adjustment in the exchange rate. The RBI's intervention can only smoothen the process, but it has to eventually adjust to the rear.
Its own
That's I mean, you know, I don't think it's a severe problem.
Okay. Well, I take your point, Professor Chakraborty. You know, if the rupee is going towards 71 or 70.64, and you have crude prices that now seem to be more in the 75 to 80 range, the RBI repeatedly points out in its assessment and prospects chapter in the annual report that there are upside risks to inflation. Do you think that that is going to be a bit of a problem, that the RBI will have to resort to perhaps 1 or maybe 2 rate hikes simply to deliver on the MPC's target of 4%?
I think it has the potential to do that without going into the merit of, you know, higher sterilization and its associated impact on interest rate on higher capital inflows, I think this sharp depreciation definitely would increase the price of our imported our oil import, and in turn it would have an impact because inflation is structural in nature in India. So definitely it would have an impact on prices. But so that is one aspect. The second aspect, I think in the medium, not even medium, in the short run, in the next 3, 4, 5 months, if we have to look at the budget 2019-20, I think what it would do actually reduce the fiscal policy space for increasing taxes on the oil to a great extent, because oil prices are hardening and also the oil prices are going up because of the dollar depreciation. So I think the fiscal, as we had seen in 16-17, which the RBI report also mentions, that government was able to generate more revenues by increasing the taxes on oil, that possibility reduces very significantly because of this sharp depreciation of rupee. So it would have a huge fiscal risk, and if we have a larger deficit compared to 3.5 or 3, 3 is the next year's target. So in that case, we definitely have a fiscal pressure of inflation, as well as the inflation that is coming, that may come due to the increase in hardening of the oil prices and depreciation of the rupee.
Okay. Well, the RBI makes... And, yes, sir. Go ahead. Just finish your point, sir.
Yeah. So I think there are two risks. As I said, the first risk is the direct risk, that is, as you have mentioned, about the depreciation of oil prices and depreciation of rupee and consequent increase in oil prices. Okay. And oil being intermediate input and not part of GST, different states have different rates, can have really a significant impact on the food prices. Okay. But of course, RBI report also talks about good monsoon and things like that. Yes. What would happen, we do not know, but definitely it's a concern.
Yes. Okay, well, so far the takeaways, a gentle depreciation would be helpful. Soumya points out that the Reserve Bank's annual report has a very good box item which says that there is a limit to intervention, and intervention often actually is negated because it pushes up interest rates and brings in more dollars in an appreciating scenario, and in a depreciating scenario it could have a reverse effect as well. So intervention not a very potent instrument. A third point, while it could have depreciation could have a positive effect, it also has the impact of rising prices and therefore an inflationary impact, which of course Dr. Rao and Professor Chakraborty have discussed. There are several takeaways from the annual report, but let me come to one that is obviously sensational. Out of the 15.4 trillion demonetized notes, 15.30 have come back. Professor Govinda Rao, how would you look at this now? We knew last year itself that 15.28 had come back. Now we know it is that 15.30, so 99.3% have come back. Now can we pass a verdict on demonetization's pluses and minuses?
Well, I mean, I think this was known. I mean, in fact, there is nothing surprising about the numbers. Now we know, now this is confirmed. Yes. You know, the RBI is putting out these numbers, has confirmed the fact that, you know, there hasn't been a gain in terms of not getting the cancelled currencies back. Yeah. It was known. But, you know, I mean, if you have seen the government, you know, the narratives went on changing, you know, from one objective to another. You know, I mean, you know, so as far as the government is concerned, it is onwards on the state of denial, and it will continue to be on the state of denial. Because they will say that, oh, digitization of the economy will happen. It will say that, you know, sort of the terror funding has stopped, and, you know, variety of things. But I think most of us who had come earlier on the TV, you know, on your channel, and in fact I was one of them, you know, had very categorically stated that this is an ill-conceived move, and this is not going to help the economy. This is going to disrupt the economy enormously. Now I think there is a large consensus that the economy has been disrupted enormously. Yes. Now there is a clarification that the entire money has come back, and I don't know what we were trying to do. Maybe there were some political gains. I have no idea about that. But as far as the economic gains are concerned, I think we have had that has been a very ill-conceived move, and it's most unfortunate. that when the economy was, when there were already other problems, you added to the problem, particularly in the small and medium sectors.
Yep, fair point. Perhaps an assessment would be 0.5 to 1% of GDP growth. That was the kind of slowing we saw in the quarters from October 2016 to about, say, June 2017. If you could calculate the amount of output that was lost, probably it would be something like 0.5 to 1% of GDP. Well, Professor Chakrabarti, I don't know if you have a number for it, what might have been the potential loss of output. But the second question to you is, was there a tax gain? Some numbers that I can quote: personal income tax was growing at about 11% in the year 2000, FY15 and FY16. In FY17, it grew by 27%. And in FY18, by 21%. Let me ignore FY18 because there must have been GST repercussions. But personal income tax growing by 27%. Also, the government claimed that the number of tax assessees increased by several lakhs, maybe 11 lakhs. The CEA pointed out that most of them paid 2.7 lakhs, showed 2.7 lakhs as income, so they were not really in the taxable net. But separately, the government said it could apply analytics to a lot of the new accounts and the old accounts, and there are some 18 lakh cases of high income. What it was saying is that we can now go after these guys and get more taxes. Are you buying that there is a fiscal gain to the economic loss that demo caused? Professor Chakrabarti.
Well, I think that's a very important question, and I don't think I have a straight answer. But I would pose certain hypotheses. And first one is with regard to the money coming back to the system. I think when we say that entire notes have come back to the system, and then your last point about some of them are suspicious and that has to be verified and all that. So we really do not know how much of it is black and how much of it is white. And if we say that predominantly it is white, then definitely the gain has not been very significant. But the question here is the size of the black economy. If we talk about the size of the black economy, available estimates starting from Arun Kumar to others, it varies from 20%, which was the World Bank estimate, to 40 plus. And if we take this 15,86,000 crore, that was the demonetized currency, it works out to be something like roughly 10% of our GDP. So even if we assume that entire money had come back, probably that would not have solved our black money problem. And when everything has come back, probably it shows that money is held not in the form of cash but something else. Yes. So we need to have different strategy in terms of our black economy generation, on the controlling black economy. Now the question of fiscal gain. Yes. I think fiscal gain that we have seen in the last couple of years in terms of fiscal higher revenue. One is trade, that is our oil revenue, the excise duty and coming from the petroleum. And
I'm pointing out to personal income tax.
As far as the income tax is
concerned, Chakrabarti, personal income tax.
Okay, personal income tax. Okay, in personal income tax, of course, the returns have increased. But if we look at data from 2005-06, such part in return has happened without demonetization also. So demonetization might have helped, but we need to really separate out how much is due to demonetization, how much is the natural growth. That's the first point. Second important point is very important to understand here is also that we are doing GST. GST also requires formalization. So and informal sector coming into formal sector, GST requires you have to have a PAN number. So the point here is that if a person who is in informal sector wants to register under GST has to have a PAN number. So the point is that also helps formalization. So attributing increase in return only to demonetization probably is not correct. I think we have to look at the other changes that has pushed formalization, and one of the major factors pushing formalization is GST. So we have to separate these out. And of course there is a fear psychosis that might have helped in terms of increasing the number of returns, compliance might have improved. But how much of it is only due to demonetization is very difficult to find.
No, I agree with you, sir. I completely take the very fine points, nuances that you're bringing to bear. But if you can give just, a one-word qualitative judgment, how much do you think was the loss of output? Probably 0.5 or 1% of GDP. Was that at all compensated by fiscal gains?
Well, I don't want to guess because there are estimates which says that it is around 1% of GDP, so it's 1.5 trillion, 1,50,000 crore. But those are estimates. But definitely, the sector which got seriously affected by demonetization was informal sector, and loss of output there would be very significant. But I don't want to guess a number which I haven't studied.
Okay, fair point. We'll leave that discussion at that. You know, the annual report has given us other things as well. Upasana, just a word, your key takeaway from reading the assessment chapter, what is the sense you're getting? Central banks are normally conservative. Would you say that the tone of this report was fairly positive on growth?
Definitely, Latha. I think they seem to be fairly optimistic on growth. I think somewhere, we are looking at a possibility of a slight slowdown in the second half of the year. And that acknowledgement I have not seen anywhere in the report, number one. They definitely seem to be extremely concerned about inflation, like we've already discussed. In fact, they've done some kind of maths to talk about MSP and the impact of MSP on inflation, and also if 1% fiscal slippage happens, then we could see a potential upside risk on inflation up to 40 basis. So they've done a fair amount of maths to talk about the upside risks which could be emanating on inflation. So they're very cautious on inflation, but they have not acknowledged the possibility of a slowdown as much on growth. One more point I would like to say is on the external sector. Somewhere I think RBI has mentioned that given that the vulnerability indicators until March, that the data that is shown, they seem to be still manageable. And they've also mentioned a statement saying current account deficit is expected to be largely financed by FDI. For FY19. That is something which, again, I find that difficult to believe because, on a net basis, we would expect FDI to be about $30–35 billion. FY18, we had the current account deficit of about $49 billion. So are we saying that we will be somewhere around the same level for FY19 as well? That's where I feel that probably we are a little more conservative when it comes to the external sector and a little more optimistic when it comes to growth.
Okay. Well, I want to ask my other panelists also their comments on these two issues. The Reserve Bank's worries about upside risks to inflation, its optimism on growth, and its optimism that current account deficit can be financed by foreign direct investment. We are taking a break and we are coming back with those questions. Welcome back. You are watching the state of the economy. We have been discussing the key takeaways from the Reserve Bank's annual report. Upasana Bharadwaj, senior economist at Kotak Mahindra Bank, Professor Govinda Rao, a former member of the Prime Minister's Economic Advisory Council and the 14th Finance Commission, Pinaki Chakraborty, professor at the National Institute of Public Finance and Policy, NIPFP, and Soumyakanti Ghosh, chief economic advisor at SBI. Soumya, Upasana was pointing out the optimism on growth in the annual report and the confidence on being able to finance the current account deficit. Do you share the RBI's confidence, or are you a little worried about both growth in the second half and current account deficit?
No, I think, yes, I am concerned a little more on both on growth and current account deficit. But on the current account deficit, I would like to highlight one important point over here. If you actually look to a simulation, and as Upasana was saying, 30 to 35 billion FDI inflows, this year the total portfolio capital outflows are, I think, already close to around 10 billion. So even if we are assuming on the basis of that and make a comparison of the debt creating flows and the non-debt creating flows and try to see what is the percentage of that financing the current account deficit, I can see that there is a significant jump in the debt creating flows in financing the current account deficit, which I think would be higher than 40% or so, I think close to 40%. If that assumption materializes, I think even though right now the RBI has said that FDI could be the driver of financing of the current account deficit, I think there is an upside risk in terms of financing of the current account deficit, because BOP for the first time in 6 years is going to be in the deficit this year of around 15 billion. That means a foreign exchange depletion of around 15 billion. And if the debt creating part finances around 40 to 42% of the total current account deficit, that's not significantly a cause for worry, but definitely that will mean that the pressure on exchange rate will continue to be there, because debt creating flows could actually go out as quickly as they come in. Second, regarding the growth, I think notwithstanding the first quarter growth numbers, which will be released on Friday,
yes,
which will possibly be on the higher side. I think the second quarter growth rates, at the second half, the growth rates could be on the lower end of the 7 to 7.5% bucket, because there is a lot of uncertainties on the external front. Oil is still in the range. Oil is unlikely to go below $70. Then there is the pressure on these agriculture. Monsoon has been erratic in several parts, so we can actually see some sort of an impact on the food inflation, oil inflation. And I will not be surprised if the rupee is on the, rupee continues to be weaken a little bit. So there will be pressure on growth in the second half. And my sense is that the first half numbers the first quarter numbers will be good, but definitely the second quarter there will be some moderation in the economic activities, because there is a constant on fisc also, so you cannot grow at this rate of government spending significant amount of capital expenditure in the rest of the year. So taking all these factors into consideration, growth will be impacted in the second half.
Okay. Well, your point is taken. The RBI has given red flags on inflation, and you and Upasana have put red flags on growth as well. Professor Chakrabarty, I don't know if this is a topic of much interest to you, but the Reserve Bank's February 12th circular has tried to ensure that the banking system completely belches out the last shred of NPA, which it probably was trying to evergreen. It's made the system strict. And what the report also says is it is planning to extend this recognition of default on the first day, one-day default, reporting it to the central database, the CRILIC, and immediately banks sitting and trying to restructure the loan. All that is also going to be extended to the NBFC sector. Are you getting a sense, which is what the Reserve Bank is saying, that if these structural reforms are in place and the public registry of credit is in place, is India at least set in motion some structural reforms in the financial space? Professor Chakrabarty.
Yeah, before I come to that, can I say a few words on the growth, because I thought it's very important, because to be fair to RBI, I think RBI's growth projection certainly is optimistic. At the same time, there are reasons which are, I think, very convincing. One is the global growth is growing traction. That's what the RBI says. And RBI also says that rising external demand will help growth. So it's not only FDI flows that is going to finance the current account deficit. RBI also emphasizes on, higher export earnings should also help. Whether that would happen or not is something that we have to watch and see. But certainly RBI talks about that. And on the domestic front, RBI has made 3 points. One is, of course, the headline inflation. Second is the normal monsoon. And third is fiscal sphere, where it talks about efficiency of tax buoyancy post GST. I think that is where there are issues, because GST is still stabilizing. Of course, it is a lot better than what it was in July 1st, 2017, and after that, 3-4 months after that, I think things have been stabilizing. But I think GST revenue across states are still not buoyant. So I think if there are fiscal slippages, that can have an adverse impact on growth. That's the first point on the growth I wanted to emphasize. On the second issue that you have talked about, banking sector regulation, if I put it together, I think it appears that they are going for more structural reform, which actually would try and control from the very beginning the process of NPA formation and bad banking. But how it works out, one has to see. I'm not too sure, but at the moment. But I think apart from forward-looking policies that RBI has taken, but the bank balance sheets are in stress, and we need to resolve those issues as well, because the NPAs that are already there are very large. So these are forward-looking policies, most welcome, but we also need to resolve our past NPAs, which is very significant. And unless we do that, I don't think private investment is going to pick up very immediately, and that would have an adverse effect on growth.
Okay. Well, Dr. Govt Rao, last word to you. The last word of the Reserve Bank's own assessment is the hard-earned gains of macroeconomic stability that have defined the recent period as its greatest achievement need to be preserved as an imperative within this endeavor. So while they speak of some structural gains that have been made, on NPA recognition and restructuring, on GST, on a public registry of credit, the hope of infrastructure kicking in, they point out that this macroeconomic stability that they have achieved by inflation targeting should also be retained. Your overall comment, do you think the economy is poised for better growth with macro stability?
Well, I think, to be fair to the Reserve Bank of India, as both Vasan and Soumya Kanti Ghosh said, first half, I think particularly because of the lower base effect as well, you would have a higher growth. The second half, I still think that things could be, would not be that pessimistic if we are able to get the investment cycle back in the system. These structural changes that you have made, the resolutions that you try to do. There is Allahabad High Court judgment. Now there is a lot of issue on this thing. But one of the things that possibly will trigger is fast pacing of the resolutions. Which is extremely important. I mean, already some 12 stress assets are getting resolved, and that is extremely important because that will start, revive the credit cycle, lending cycle.
Yeah.
And private investment will have to come up. At the end of the day, ultimate sustainable growth is possible only when the private investment is brought in. And we still have a huge problem of twin balance sheet crisis.
Yes.
That's something which we will have to do.
Absolutely.
And one small thing that I want to say to supplement what Pinaki said earlier, namely that you see much of the growth in income tax revenue has been due to GST.
Yeah.
In fact, you see, you can also see the international experience in that.
Yeah.
When Thailand introduced GST way back in 93, the revenue neutral rate was 10%. They levied the tax at 7%. Their income tax revenue increased by 25%.
Okay. Fair point.
I mean, this is because I see that formalizes the economy, and most of the people. So let us not attribute it to the wrong causes.
So we have to wrap up.
GST,
I take your point. I take your point entirely, sir.
Revenue buoyancy will continue.
Yeah. Oh, that's excellent to hear. On that positive note, we wrap up this special show. Thank you very much for watching.